Hello, everybody, and welcome to the 56th edition of LM's Weekly Wrap, our weekly program to cover the developments relating to the markets. This week was important for us from the international markets point of view because we had the Federal Reserve meet, and on expected lines, we've seen the rate hikes. And I think the commentary has also been a kind of dovish, which was already indicated earlier. The domestic earnings season continues. We've had a lot of companies from various sectors declaring their numbers, large cap companies, mid cap companies. And an important factor to take into account, as we had pointed out last week also, is that markets are looking stretched in terms of valuations. Liquidity is driving the rally, and individually as well as at large cap company levels, we are seeing a lot of valuations being stretched. And the result of this is that once the companies are declaring their numbers, we are seeing sell off in a lot of stocks. As a matter of fact, most of the large caps have disappointed till now, or their results have been largely in line with the market expectations. So there have really not been any fireworks as such in the market. To give more perspective on the markets, I have with me Jash. Jash, welcome to the show, and kindly take us ahead on the international markets, domestic markets, which will be followed by the sectoral outlook from my side.
Thank you, sir. It's a pleasure to be back. And Nifty was at record levels last week, and we have been seeing some healthy correction this week. It's not going too negative, but about 200-300 points movement we are seeing in Nifty and as well as in Sensex. Our stance remains the same. We are not negative as of now, as long as Nifty holds to 18,300-400 levels above. I think we are yet to have some kind of upside left. Whatever we see is healthy profit booking. Whatever profit booking happens is always healthy, because if it won't come down, we won't get the leap to go up in this market. Coming to the Fed, increased the rates by 25 basis points, which was much expected and in line. The commentary, as spoken by Nirav sir, that it has been dovish. It is in line, and they are going to wait for the data of the next 2 to 3 months, and then they'll say if they're going to increase the rate by 25 basis points again or not. I think this is in line. They are keeping a room for any error or any negative in the data that comes. But the data, they said it is going to be in line with the June data. So that gives some kind of cheer over there, and we don't. And also they mentioned that they are not going to be cutting the rates anytime soon. So FY24 completely, they're going to be in this levels. It's going to be on the higher range. Post that, we can expect some kind of rate cut. Nevertheless, ideally the rate hikes and higher interest rates should mean the market should go negatively as the money is pulled out. But we've been seeing good results, better margins, and softening in some in inflation. Not the food inflation, but the raw material inflation. That is leading to the increasing the market and the stock prices. Whereas we've been hearing food inflation from the consumption theme companies, and they are definitely worried about it. On more light on the inflation side, or food inflation side, and sectoral outlook, I would like to give it to Nirav sir. Thank you.
Yeah, thank you, Jash.
Yeah.
As Jash pointed out, like to point out a few themes which are playing out in the economy as well as in the markets. First of all, we start off with the rainfall. I think the progress of monsoon has been satisfactory, but as pointed out by us earlier also in our previous programs also, the trend of the monsoon has been very, very erratic. There has been erratic pattern of rainfall. There has been unseasonal rains in various parts of the country, there has been a late start to the monsoons and there have been certain variations which have been reported. There have been certain floods, unfortunate events of floods in various parts of the country which we have seen. So this is a cause of great concern. The cropping patterns, especially of with respect to rice and pulses, is likely to get impacted because of this erratic pattern of rainfall, and what we have seen is the El Nino effect impacting the economy. So this remains a cause of concern. This has been highlighted by various companies, and we've seen as far as the government is concerned, it has banned non exports of non basmati rice, etc. So the government is trying to ensure food security on one side, and at the same time also ensure that the prices remain under control, so that the inflation can remain under control. So this is one factor. Second factor, as we spoke about the El Nino, we are seeing global warming, which is the heat waves which are impacting China and Europe. These two countries or continents, they have been severely impacted by the heat wave, and we are seeing that till now the power consumption has gone up substantially in both these countries on account of this heat wave, and this is likely to result in a huge demand for coal going forward. So these are some important trends to watch out for, because these are giant economies and their consumption trends impact everything which is happening in the world. So this is one factor. Second factor, coming to India, the earnings season continues, and most of the companies, as we pointed out, have corrected post their results. However, there is a silver lining. So if I were to quote the conference call extracts of Ultratech Cement, they have said very, very clearly that the gods up there seem to be Indian. So the thing is that a lot of things are particularly working out very well as far as India is concerned. The India infrastructure story continues to grow very, very fast, and it's the silver lining as far as the economy is concerned. To just give an example, the budgetary allocation for the road sector was during the budget was 2.7 lakh crores. Now there has been a directive which has been given by the ministry that 80% of this money should be spent on the desired projects or the planned projects till December of 2023. And in line with that, we are seeing impeccable execution of the road projects, and we have been seeing that till mid-June, approximately 1 lakh crores has already been spent on the road projects, and another 1.2 lakh crores will be spent in the planned manner by the next 3 months. So what we are trying to highlight is that very aggressive targets were set by the government for road construction, and the government is well on track to achieving the target or milestone of 40 kilometers per day of construction as far as the highways are concerned. So this is a very, very important milestone as far as the Indian economy is concerned. This is just one example. We are seeing such aggression happen in railways. We are seeing freight corridors being built, and all this augurs very well as far as the cement and the steel sector are concerned. Now, as far as cement is concerned, we are seeing slowly that the prices are beginning to soften. We are beginning to see moderation in prices, pet coke, coking coal, and I think going forward, if there is a moderation, the stability in the commodity prices, especially pet coke prices, which have corrected from $170 per ton to $110 per ton, then I think we could see a lot of margin improvement happen in the next few quarters. So that is a silver lining as far as cement is concerned. One, demand, and second is a moderation in the input cost. Similar things are being noticed in the steel sector. Couple of developments in the steel sector. One is that China has decided to cap the production of steel at calendar year 2022 levels. So what is going to happen is, going forward in this year, we will see a moderation in output of steel, and that is likely to help or balance the global steel scenario. So demand supply situation is likely to get improved, or is likely to see huge improvement as a result of this decision by China. This is the first factor And as far as the domestic scenario is concerned, we are seeing that iron ore, coking coal prices, they have also beginning to stabilize. And the most important thing is that the prices of steel, as far as the international markets as well as the domestic markets, both have bottomed out, and we are seeing channel destocking which has been almost completed. So this is a very very positive development as far as the steel sector is concerned, and consequently we are seeing this week that metal stocks have begun to see a recovery in trade. We are seeing cement is also showing green shoots of recovery. The third important factor is this week we have seen the power index. The power index was up approximately 6% in trade, and some of the biggest gainers in this week have been stocks like NTPC, Power Grid Corporation, GAIL, etc. So we are seeing positivity over there too. Rest, I think FMCG sector stocks, they have declared their numbers. HUL, Nestle, good set of numbers, but disappointing. Markets have been disappointed. We've seen Colpal declare their numbers. Most of the commentary is quite strong, but as indicated by us, that input costs have been biting because of pandemic. We all know that supply chains were disturbed, etc. Now an interesting commentary which has come from the FMCG sector is that if the commodity prices or the input prices continue to remain stable, then then the FMCG industry will be back to the normal trends. And the normal trend or the healthy trend for this industry is that 1/3 of the growth or 40% of the growth comes from the price side, whereas 2/3 of the growth, that is 60% of the growth, comes from the volume side. So till now we have not seen volume growth. If you see the results of HUL in the last quarter, the volume growth was just 3%. Now for the next couple of quarters, the management is betting very heavily that the volume growth should aid the results of HUL. So a lot of such things are there, a lot of observations are there. Rest, I think, just coming to the different sectors, IT sector continues to remain under pressure. FMCG, we have seen profit booking after a good set of numbers. As pointed out by me, metals and cement continue to do very very well. Banking has been quiet in trade. This week's winner was definitely pharma sector, because some of the biggest winners of this week post a strong set of results from Cipla and Dr. Reddy's Laboratories. We've seen good performance even from Sun Pharma, Divi's Labs, which has surged in trade. So pharma sector is trying to make a comeback. Lupin is looking, of course, quite good in trade. This we have indicated earlier also. And rest other sectors, I think oil and gas, Reliance, I think O2C, oil to chemicals, has been disappointment. Downstream petchem has disappointed, whereas the consumer facing segments have done quite well in trade. So I think maintain a cautious outlook. And finally, coming to railways, we have seen some profit booking even over there in that segment. We've seen RVNL down about 15% in trade post the announcement of the offer for sale by the company. So I think we maintain a cautious outlook as far as the companies are concerned. Most of the companies which have declared their numbers have corrected in the range of 4 to 6%. Some companies have corrected 8 to 10% also post the announcement of the results. So a lot of other things to discuss, but I think the time constraints will not permit us any further. Do write back to us with your feedback, and I hand over to Jash for the concluding remarks.
Thank you, sir. Please like, share, and subscribe, and stay tuned next week for more updates. Thank you.
Thank you.